Namaskar and welcome to our latest commodity audiocast where we explore recent market developments and key trends. I'm Ravindra Rao from Kotak Securities Commodity Research Desk and I'll be your guide through today's episode covering a range of commodities, shedding light on the factors shaping their prices and influencing market sentiment. So grab your headphones and join us as we navigate through the latest in the world of commodities. In the previous week, financial markets took a breather in anticipation of Federal Reserve's preferred inflation gauge. Despite a series of hawkish comments from top Fed officials, markets remained buoyant with the major indices hitting record highs. The dollar, however, showed signs of stagnation around the 104 level as traders appeared unfazed by the central bank's cautious stance. We mentioned in our last week's audiocast that a dollar might take resistance close to 105, 105.50, and on the lower side, support near 103.50. Minutes from the January Federal Open Market Committee meeting revealed a predominant concern among officials about the risks associated with cutting interest rates prematurely. The consensus was that interest rates were likely at their peak, but the timing of first rate cut remained uncertain. Officials emphasized the need for more evidence of inflation firmly reaching the 2% target before considering rate reductions, highlighting worries that progress could stall. This sentiment was echoed in speeches from various officials. Coming to commodity specific, in the precious metals market, COMEX gold exhibited a tight trading range amid the uncertain rate environment. The yellow metal traded between $2,023 and $2,045 per troy ounce, finding support from a softer dollar and geopolitical concerns. Investment activity, though, declined during the week as reflected in the SPDR gold ETF holdings. As of February 22nd, the holding dropped to 827.81 tons, marking the lowest level since July 2019. On the price front, gold formed a bullish engulfing candlestick pattern uh, previous to the last week, leading to an upward trend approaching a resistance at $2,065 per troy ounce, marked by a falling trend line. A successful break above this resistance could propel gold towards 2085 per troy ounce. Currently, the price action indicates consolidation in the range of $2030 to $2062 per troy ounce, suggesting a temporary equilibrium as traders await a decisive breakout or a reversal. In case of MCX Gold has been taking support near 61,500 levels, but last week the low was not as low as 61,500, but it was 61,877. But then at the end of the week, the prices moved up on a weekly basis. The prices have closed around a percent up and is above the 62,000 mark. However, it is still in a triangle, and the resistance is close to around the immediate resistance is around 62,750, and above that the resistance would be around 63,000. So till then we expect a consolidation. On the lower side, 61,500 as I mentioned would be the support, and on the higher side 63,000 would be the resistance. So until and unless this level breaches, we expect the consolidation to continue. On a lower time frame chart like the daily chart, the support is near 61,850, the low which it had hit last week, and resistance is close to 62,400. If it sustains above that, there is a possibility it might move to the next resistance near 62,720. Coming to silver, silver has been in a tight range similar to gold. If you look at the price action since mid of Jan, or say mid of Jan, it is between 23.60 on the higher side on the COMEX, and on the lower side 22 has been hit twice. From there we have seen a recovery that makes $22 a very strong support. Immediate resistance is near 23.25. If that is taken out, the price might move up till 23.70, which is a good 200-day moving average resistance, and also the consolidative range upper bound. So if it moves about 2370, we might see a fresh up move in silver prices, or else even silver would trade in a consolidative range. And if we talk about the MCX prices, on the lower side, 69,200 still acts as a good support. It recovered in the later part of the week, but it might take resistance near 70,800 to 71,100. If it moves above that, we might see prices going higher towards 72,170. Now coming to energy, crude oil experienced a 2% weekly loss, slipping from a 3-month high of 79.80 per barrel. Now we mentioned last week that it is in a tight range, and until and unless it goes above 79.50 to $80 on a closing basis, the prices would trade in a range, and exactly that happened. The high was near 79.80, and from there crude oil slipped almost close to around 76.35, and it closed around 76.49 levels. So it exactly is trading in that triangle. The decline was attributed to supply concerns related to attacks in Red Sea and Israel-Hamas conflict, overshadowing a gloomy demand outlook from China, which is the top importer. On the natural gas front, natural gas witnessed significant volatility with prices surging as much as 12% a day, and then next day it fell by around 6.5%. Triggered by the initial rise was triggered by one of the shale producers' announcement of a reduced gas production in 2024. But there is a bullish engulfing pattern on daily chart in case of NYMEX natural gas. Now that makes the positive bias. The pattern low is near $1.522 per MMBTU. So until and unless it is above that, the pattern will be active, and we might see prices going higher. But if 1.522 is taken out uh, uh, precisely on a closing basis, we might see further downfall in prices. Otherwise, there is a possibility of a reversal in natural gas. In case of the base metals market, LME metals closed the week on a mixed note. Sorry, efforts to address the property crisis in China were met with skepticism regarding the recovery of housing demand, despite a 25 basis point cut in 5-year loan prime rate aimed at supporting the property market. Investor confidence remained lukewarm. Now on the price front, copper has formed I would say a bullish engulfing last week, and last week the prices have closed slightly above the uh, no, it has closed close to the last week's high. So if it sustains above 731 on a weekly basis, there is a possibility we might see prices going higher. In fact, the prices went up till 736. Now this is the next month contract, but at the end of the week the prices slightly moved lower. So it has to close above 731. Around 730 731 levels, and now if that happens, the prices might move up, and on the upside resistance is near 736. Above that, we might see prices going higher towards 745 levels. In case of zinc, zinc has formed I would say uh, a piercing candlestick pattern, but the confirmation will come only on a close about 217.50 on a weekly basis. Now if that happens, we might see an up move in zinc prices as well, or else it might trade between 218.50 to around 206, not 206, it would be somewhere around 210. So 218 to 210 would be the range, until and unless the upper bound resistance of 217.50 as per the piercing candlestick pattern breaches. Looking ahead in the week, the spotlight will be on the US PCE price index, the second estimate of US Q4 GDP, ISM manufacturing PMI, and series of speeches from Fed officials. Expectations of an uptick in Fed's preferred PCE price inflation following hotter than expected CPI and PPI for January may pose a headwind mainly for gold prices. Meanwhile, China continues to implement measures to support its property sector, including cutting key mortgage rates and urging banks to boost property loans. However, the efficacy of these measures remains uncertain, with calls for reforms growing as China's parliament convenes next month. Any significant decline in business activity could intensify the need for bold policy decisions, adding to the urgency of addressing economic challenges in the region. As we wrap up this edition of our commodity audiocast, we have navigated the intricate landscapes of various markets, gaining valuable insights into the forces steering commodity prices. From gold's stable momentum between support and resistance levels to the ebb and flow of energy markets, the commodity landscape remains as dynamic as ever. Stay tuned for future audiocast as we continue to decode market trends and provide you with a comprehensive understanding of ever evolving world of commodities. I'm Ravindra Rao signing off. Until next time, happy investing.